I'm a financial guy, and these are not the type of insurance policies you think of. Just like there's car insurance and home insurance and health insurance, life insurance is typically cheaper than all these other insurances, and it's really cheap if you go to a financial company. Because I use multi-billion-dollar financial companies that hold on to money for pensions and large entities, and they're not trying to make money on life insurance. So their cost of insurance is a fraction of other companies that might be really good at car insurance and home insurance, and I don't want to pick on anyone specifically because they might be like a good neighbor, right? But they suck at this kind of stuff. This is not what they do. This is not their niche. They profit tons by charging people a lot of money for term insurance and whole life insurance policies. This is not that. So I'm able to minimize and mitigate these life insurance policies down to the penny, so that really 99% of what we're doing is setting this up to be a financial tool. But that is the golden ticket. The legal, definitions is that you must have a life insurance policy first that is then greatly overfunded. So you can put, let's say you buy a $500,000 policy. There is, based on the policy and your age, there is an algorithm that tells us how much money you can put in. So if I have a client that's trying to put, say, $50,000 a year into an account, right? So they might have to have a minimum amount of insurance that we build into that. So they can have a policy that might cost $500, but they're putting in $50,000 over and above what that insurance costs. And then that money is growing at the rates and with all the benefits that we were talking about. So that is what makes this not too good to be true. Tax code 7702, and it's been around for a long time. Again, this is maybe not something you've heard of before. They updated the tax qualification for this in 1984, and back then, 40 years ago, they stated that based on the amount of money that you're putting in and your age, you have to financially and medically qualify. So you have to show that you have legitimate income or assets and a medical reason to have that much of a policy. So what that means is if you make $100,000 a year, they're not going to let you put $500,000 a year into infinite banking. You got to be able to show that you have legitimate income and or assets to do it.
Everything that you need to know, what you need to become a real estate investor, we have it done for you. So click on the link in the comments below and we'll share all that data with you.